Okay, so welcome all to today's session of Financial Fitness Program. My name is Samir Bapat, and today we are going to learn how to earn money using accumulation and distribution. So we are going to learn about accumulation and distribution. Once we understand what is accumulation and distribution, it will be easier to understand and earn money. So how many of you are here to earn money? Can I have yes from all of you who are here for learning and earning money? And only money. If you are here for anything other than this purpose, then this is not the right place. Okay, great. Thank you. Money, that's it. Okay, so let's start diving into the session today. Now, there is a market proverb. There is a market proverb which we need to remember, and it's a very important proverb. It's not of today's proverb. It was true 100 years ago. So, common investors who lose money big time in stock markets will buy on hope and sell on fears. This was said by W.D. Gann. He was trading in the year 1921. He wrote a book on trading. In that he wrote, common investors who lose money big time in stock market buy on hope, sell on fears. So true today as well. It will be true as long as human beings are trading in the stock market. So if we want to earn money consistently in stock market, we should not be buying on hope and selling on fears. And for that very reason, we have to today very clearly understand what is accumulation and what is distribution and how to identify. And if you are not able to identify also, we should be aware what is happening in the market. We should not be just hopeful or fearful about what is happening. So before we dive into accumulation and distribution, this is a very important point. How many of you realize that there is a very limited number of shares which are there available in stock market, right? There is no, like we have a supply of vegetable and milk and everything every day, right? Every day we order for vegetable, we take vegetable, we consume, again it grows in the fields or milk from the cows, and there is a continuous supply. But in share market, the total number of shares are fixed for a long time. How many of you agree or how many of you understand that there is a limited number of shares in the market available, right? Within those number of shares also, the total number of shares available for trading for change of hands is fixed, which is again lesser than the total number of available. If you see, if people are new to stock market and they are thinking how total number of shares are fixed, the number of shares are issued either wherever the company is getting listed or getting formed. The number of shares, the total quantity of shares is issued to the market. So it is available in the market. There is a long process of 6 to 8 months even to increase the number of shares. If they want to give bonus shares, again, it's a process of 3 months. So it will not happen that suddenly we'll have a lot of shares. The number of shares is fixed. Even if bonus shares are there, still it will take longer time. So more or less for years together, the number of shares available for trading is fixed. Okay. Currency notes, it's not like currency notes. It gets printed, right, by RBI, and they can increase or decrease also at any given point of time. I'm not very sure about currency notes, how they are done, but let's say it's not available, right? The quantity of shares available for trading is fixed. So, yes, agreed. So Vipin is saying bonus shares increases the quantity, but it will not happen on day-to-day basis, right? The point what I'm trying to make here is that the quantity of shares will not change on day-to-day basis, right? It will not happen that this month there are 1 crore shares available for trading. Next month it will be 1 crore 25 lakhs. Next month only 75 lakhs. After that, maybe we'll have 5 crores total shares issued by the company. It will not happen like that, right? The total number of shares issued by the company are fixed. Okay, and they will remain fixed for quite some time unless until they issue new shares or come up with the IPO or SPO. The total number of quantity available for trading is fixed, right? Okay, everyone okay with that? Everyone okay? Okay. Now, shareholders. Shareholders are predominantly, who are the shareholders who hold the shares? Shareholder is nothing but the person or people who hold the shares. Okay. The person or people who hold the shares are promoters. Promoters means those who have stake in running the company, right? They may be the people who started the company. They may be the people who joined the company later. But promoters are the people who have more interest in running the company on a day-to-day basis. So they are called promoters. They promote the company. Then we have mutual funds at a higher level. I'm saying we have mutual funds, FII and DIIs. Then we have high net worth individuals who invest as an individual as per classification, and even having more than 1 lakh rupees of share, I think it comes in an HNI. But for our definition, they are pretty rich people, we can say. And those are HNI, and then we have common investors. So this is on a very high level, I am saying. Okay, there are around 30 classifications of shareholders. For simplification of understanding, I am boiling it down to 3 or 4 classifications. Everyone okay with this classification? Yes, no, can I have yes? If you're okay? Okay, great. Now what happens is, why I said there is a availability of shares and there is a limited availability of shares. If you refer my previous slide, I said total numbers of issued by a company are fixed, so it will issue number of shares. Out of that, total quantity of shares available for trading is also less. What does this mean? Normally, promoters shares held by the promoters, the shares held by the people who are managing the company, who started the company, who have stake in running the companies, are not traded in the free market. If they have to sell or if they have to increase, they have to follow a lengthy process. So it is a complete process. If they want to buy, they have to inform, then they have to declare, okay, I'll be buying at this rate. They cannot do it very quietly, and they do it very rarely. Promoters will rarely increase their stake or decrease their stake. So mostly, if I have to give an example, okay, if a company share, let's say there are 100 shares in the company, percent, let's say there's 100% shares are there, or let's say, for example, 100 shares are there of a company, then the promoter holding is 50%, okay? If the promoter holding is 50%, that means the promoters of the company are holding 50 shares out of 100 shares. So normally those shares promoters cannot sell or buy very easily, because then it becomes an insider trading. They will have penalties, and also they have to declare well in advance, okay, I'm selling or I'm buying like this. There is a process, lengthy process for that. So what happens is, see, everyone can see, right? So if the promoter holding is 50%, then the available shares for the market to trade, for mutual funds to invest, or FII or DII or HNI or common investors to trade, is only 50% of the total shares, correct? Agreed? How many of you agree that if there are 100 shares, 50% or 60% are with promoter, then only 40% are available for trading? So it's a limited shares available for trading, correct? So that's what the limited shares, which removes the promoter shareholding, the limited share which is available for trading is called free float market capitalization. One is market capitalization, which means the all number of shares multiplied by current market price. And there is another term called free float market capitalization. That means the number of shares available to trade into the current market price. It becomes free float market capitalization, right? Okay. 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 So I don't know how to disable the chats. You will have to disable it yourself for yourself, right? I have so many comments. Okay. Okay, guys. What I would request is don't pay much attention to the comments. Okay. Just pay attention to whatever I'm sharing, right? Why you are reading comments? That comments are for me to read and understand whether people are understanding or not. Okay. So don't worry. Okay. Now, shall we proceed? Okay, great. So what I was saying is, so free float. So now we have to understand. So one thing what I want everyone to understand is very clear and keep in their mind when they are trading is there is a limited or fixed number of shares which are available in the market for changing hands. Okay, they change hands. They change their hands from mutual funds FIIDI to HNI, HNI to common investor to HNI, HNI to mutual fund. So same share changes hands at different stages of stock price movement from one player to another player, right? So that is where the different patterns evolve in stock market trading. There will be a trending market, there will be a sideways market, and all that all happens because in this complete life, when the share is being traded, the same number of shares is being exchanged between, it is changing the hands between these people, right? This is imagination, right? Remember, it is not a full supply of stocks which is coming in like that. Okay, everyone okay with that? Everyone okay? No, don't worry. People are asking questions. Don't worry. Let them write chat. Don't worry. You just those who are, don't get distracted. Few people are getting distracted by a few people who are asking questions. Okay, so don't worry. I am okay. Let them ask questions. I am not answering right now. I'll be answering at the end of the session. So I'm seeing a lot of people getting distracted because of that. Don't worry. Don't pay attention to their questions. I am also not paying attention to their questions. Okay. Okay, so let's go ahead. Okay, now, okay, okay, I'll pause for 1 minute. I'll pause for 1 minute and I'll clarify a few things. Okay. Yes, I agree with many people. They're asking so many questions and they want the clarifications right now. Please see the number of people who have joined. As per my record, almost 317 people have joined. Everyone is at a different understanding level, so we have to accommodate everyone. So please be with me with the flow, understand that, ask questions specific to this. Okay, and then we will take questions at the end of the session. That way you will be able to optimize the time of everyone. Okay, and don't worry, if someone is asking some question, if you're getting distracted, switch off the chat. Don't worry about those questions. Okay, focus here. Okay, it is important for each and every individual to understand what I am saying, right? It is not important what others are commenting. Fine, everyone okay? Can I have yes, one panel? Yes, if we are okay, don't worry about others. You are here. Tomorrow you are going to earn money. Who is writing the chat, he will not earn money, or who is distracting will not earn money. You are going to earn money. Okay, so just have focus here. Try to understand things. Very specific to this, ask the question. If very specific to slide, ask the question. Okay. So one thing we have to realize is there is very limited number of shares which change the hand. And when they change the hand, there is some pattern which evolves, which forms the accumulation and upmark and distribution in the stock market. Okay, so how price moves? Okay, now I'll take you to the shares here. Okay, now just for a confirmation, can you see this chart here? Can I have, yes, if you can, yes, okay, great, thank you. See, this is a Jindal stainless steel chart, okay. Now, what is, I'll hide volume and everything just for the sake right now. Jindal steel, it went up, then it moved sideways, and then it came down. So the pattern is it went up, moved sideways. When I'm saying sideways, it is something like this. Okay, this is sideways. So it is going up, going down. It is not going much up or down. Though it looks, yeah, it has gone a little bit down, but it is going almost sideways, right? It went up, down, up, down, up, down. Again, after 5 to 6 months, it is at the same location where it was few months ago. So it went up, went down. This is called sideways. Again, it was in downtrend for some time. It remained in downtrend. Then again, it started moving sideways. Then it went down. Then it went up. It went sideways, went up, sideways, went up. Okay, this is one example. Now, if you see HEG, for example, okay. Now, HEG, if you see, it is in sideways movement right now. It is going sideways. It went up. It was in sideways here. It was going up and down here. From here to here, it was in sideways movement. It was in downwards movement here, again sideways. Let's take graphite, for example. Okay, so there is a downtrend. Then again, there is a sideways movement. If you see, this is a sideways movement which is happening here. Again, a downtrend. After a while, again a sideways movement and a uptrend. Now, why I am showing all this to you? See, any given stock, I have shown you 3 examples. If you are looking at the charts, if you look at any chart you look, either it will move sideways or it will go up or it will come down. There are only 3 movements which are there in the stock price movement. How many of you agree that there are only 3 types of movement in any stock? Either it goes up or it moves sideways or it goes down. That's it. Any stock you take, anything you take, either it will move sideways or it will go up or come down. 3 types of movement. Our focus is, today's focus is sideways movement. Okay. Our focus today is sideways movement. Now, this is a sideways movement. If you see HEG chart here, this is, it went up, came down, went up, came down, went up, came down like this. Now, can you see it almost started from 9th of April to May, June, July, and it's almost end of the July. So April, May, June, July, almost 4 months, it is going sideways. How many of you can observe this? Can I have yes from all of you if you can see? Now there is something happening here. There is something which is happening here. So what is happening here? It's happening consolidation, right? Consolidation can happen at the bottom also and at the top also, right? So if you see here, if you see from here to here, almost it consolidated from here to here for almost how many months? Almost from end of 23rd April till almost April here, right? Almost 10 months it was consolidating. Okay. When we say consolidating, Dilip, when we are saying consolidating means it is moving sideways. As simple as that. It is moving sideways. Some people call it sideways. Some people call it consolidation. It is consolidation. Now, how it is related to our topic? What happens is, I'll show you an example of SBIN. Okay. Okay, before we go to the example of SBIN or graphite or something like that, normally what is happening here is, let's take an example of graphite. Okay. Can we agree that from here to here on a, if you see at a high, from here to here at a, from at this point of view, okay, it was range bound, correct? Range bound. It went up, went down, went up, went down. It was a range bound. Finally, and where, how did I draw this rectangle? Because roughly, okay, there is no precise, you can say, science behind that. Roughly, visually, you can see that, okay, it was going down, it came, it got resistance here, it went down, support, support, resistance, support. So it went down, took support 3 times, resistance third time, fourth time. When it went out, it broke out from this consolidation. Normally, what is happening is, all this while accumulation is happening. Okay. Typically, when there is a accumulation and the breakout on the higher side, this is called the accumulation phase. Okay. When it reaches, after it goes up and starts consolidating at this phase and then starts going down, this phase is called distribution phase. And I'm going to explain you why this is called accumulation phase and why this is called distribution phase. Before I explain to you this, let me just give you a hypothetical situation. Okay. Now, let's say, anyone businessman here? Anyone who is businessman here? Can I have one? Yes. Okay, Raju. Okay, Raju. So you only let Raju only answer. Okay. Now, let's say Raju is a businessman, and if I have to buy, and let's say there is a, this is a marketplace. Okay, this is a limited boundary of a market, and we have a, let's say only 1 lakh diamonds in this. Okay. Okay. Only 1 lakh diamond here in this market, and there is no possibility of any more supply of diamond inside this market. So this is the boundary of the market, and only 1 lakh diamonds are available, and there is no possibility that any additional diamonds will come into market. Let's say each diamond is costing 5 lakh rupees as of today. Okay, so 1 lakh diamonds, and the price is 5 lakh rupees per diamond. Now, I feel as a buyer, I feel that because of some reason, because maybe of marriage season, because of something is going to happen, because of government policy, something I understand, because of some reason, I, as a big player, if I'm a big player and I have lots of money, maybe thousands of, maybe 1,000 crore, 2,000 crore rupees, I have analysis that because of some reason, the price is going to go high for that diamond. Everyone with me? Okay. Okay. Don't type yes. Okay. Be with me. Now, In case if I am a big player, I have 5,000 crores, if I go in the market and simply tell, so Raju, this question is for you. Okay, if I go in the diamond market, which is restricted by the boundary, and I say, okay, I want 50,000 diamonds, how much it will cost me? Okay, if I go and ask straight away, if I go to Raju and say, okay, Raju is a diamond merchant, and if I tell him that, okay, I want to buy 50,000 diamonds out of 1 lakh available in the entire market, I want to buy 50,000 today. What will happen to the price of diamond? Raju, okay, question to you. What will, you can write your answer in the price. Today, it will rise, right? It will go up, correct? It will go up, right? Naturally, it will go up. Suddenly, Raju will see, okay, there is a huge demand. Why? Immediately they will think, okay, why this fellow is buying so much diamonds, correct? Okay, now everyone can answer. Now you may think, if I'm going into a diamond market, if there are only 1 lakh diamond available, and I straight away enter into diamond market, pick up my collar like this, I say, okay, I want 50,000 diamonds. How many of you agree? Immediately the traders will sense that something is happening, something is going to happen. Why this fellow is coming and picking up 50,000 diamonds? How many of you agree that the moment in the morning, if I go and declare I want 50,000 diamonds, the price will go up? Common sense. How many of you agree? Yes? Because diamond is not a perishable item. It will be there. They will sense, okay, something is happening, it will go up. So now what will I do? What will I do? I don't want to increase the price also. See, I am there to buy and hold, right? How will I earn if I'm buying a diamond and tomorrow when the price goes up, I want the price of diamond to go from 5 lakh to 10 lakh and then earn. But if I go in the morning one day and I say 50,000, I want 50,000 diamonds, maybe the same day itself the price of diamond will go to 7 lakh rupees. They'll say, okay, now we are selling for 7 lakh rupees. So I don't want to create flutter in the market also. So what will I do is, though I want 50,000 diamonds, I will go first day. I will buy some 1,000, 2,000 diamonds. So this is the price graph I am making. Okay, so if I go, I'll buy 1,000 diamonds. So the price will go up. Fine. Then next day I will not go. Okay, and next day I will not go. So maybe it is at 5 lakh rupees per diamond. It goes to 5 lakh 50,000 per diamond. Then next day I will not go. I'll buy 1,000. Next day or 1 or 2 days, again the price will come to 5 lakh rupees because the transaction is not so much. It will again after a few days, when it comes back to 5 lakh, I will go maybe 2 days, 500, 500. Again the price will go up. Again it will slide back if I'm not going for a few days. So what I will do is not to create flutter in the market, not to create a buzz in the market, without people knowing any much about it, I will go and slowly I will start picking up diamonds from the market. Some traders will get a wave. Was this fellow? I saw him yesterday also. This fellow was moving around the market and he bought something. Okay, so it may happen that the price might go something higher because some traders would have identified me that this fellow is coming every alternate 2-3 days. He comes here and takes thousands. Kuch to gadbad hai boss. As soon as they'll see me, they will increase the price. Maybe it will go down. I don't go for a few days. Again, it will come down. So this process may take me around 2 to 3 months, 4 months time, where I will go every time the stock price fizzles down to some certain support level. I will go, it comes down, I will go and buy some quantity. Again, it fizzles down to some level. I will buy after a few days, right? What I am doing is, Shweta Kumar said rightly, I am accumulating slowly. Am I accumulating here? Slowly and slowly. I'm not creating much disturbance in the market. Slowly I am bringing, right? How many of you agree that I am accumulating at this point? Again, getting the feeling how I am accumulating. I am not creating a flutter in the market. I'm just going there slowly. I am getting buying, buying, buying. So the price in the diamond market for the diamonds will move sideways for quite some time. But because there is no news per se, it's only my view, right? It's only my information that in coming days there may be a policy change, there may be something which is going to happen big for the diamond. So I am buying the diamond slowly and accumulating for that this praise. Okay, so someone in the same way in the stock market, when people who are analyzing big mutual funds, HNIs, FIIs, when they have to pick up the stock, they will not go and pick up the stock. They will go and they will not create flutter. They will slowly, slowly accumulate this. Now, what happens is at this time, second point, this price is there, right? A common investor is not aware about this. At this point of time, suddenly, you will find there are lots of, when the accumulation happens, right? Whenever the accumulation, see, these are very subtle points, okay? This will not come in technical analysis, but you have to observe as it happens. So let's say I'm making this box here, and when this box is about to be broken, you'll find that suddenly I will start having some articles about diamond. Okay, diamonds are woman's best friend. Diamonds will be used in so and so. There is a diamond is very, very rare. Government is bringing a policy where whoever is holding the diamond, he will get some XYZ reward. Suddenly you will find once this phase is done, accumulation phase is getting over and people are getting whiff of it, you'll find many talks happening about this diamond or this stock in the TV show. You'll find some articles coming in the newspaper about how certain policy is going to impact certain sectors. And then what happens? It gets publicized. And then when it is all about to get loose, I take in my final plunge. I buy in big volumes this diamond, and the price breaks out on the higher side of this accumulation phase. Because I have accumulated for a long time, it breaks out. Okay. So this is a breakout. Okay, Mohit, you are just going ahead of the time. Okay, just be with me. When it breaks out, the common investor gets involved here, or maybe he gets interested. Few common investors get interested when it breaks out here. Few common investors get interested when the stock is here, and few common investors are interested when the stock has already gone 100 to 100% up, or at least 60 to 70%, because the news is spreading, right? The news is spreading. This stock is wonderful. This is doing so much wonders and all and all and all. How many of you have seen people when the stock has gone up by 60, 70, 80%, 90%, they will get interested and they'll come to know, oh, this is a very wonderful stock. This is a long-term stocks. They have this much growth story and all these things will be there, and they will understand, and every Tom, Dick and Harry will come to know about that stock, that the stock is so wonderful. Like they say, if a pan wala is telling you to buy a stock, it's time to sell actually. Okay, how many of you have experienced that when it is going up, you will see lots of paper, news stories, people talking about it, WhatsApp forwards, all explanation on the quarterly results that this is fantastic and all, everything is happening. But what has happened? Where is the real game? Where is the real game happened? This real game happened in accumulation. Okay. Now, and the price has already gone up. Correct? Agreed? Everyone? Everyone so far so good? Okay. Now, what happens is, I'll just make a miniature drawing of this and I'll come to here. Okay. Okay, I'll remove this. If diamond purpose is solved, I'll remove this and then let's go to it. Okay. Now, see, this was the accumulation phase here. Okay, this was the accumulation phase which happened here. Now, after that, you see all the news and everything. You'll see all the news happening in the market. It goes up, it goes up. So what happens is it reaches to the point, this point. So some investors enter here, some investors enter the market here, some will enter here, and it reaches the top. Now, see, what is happening is, again, I'll come back to the first point. The number of stocks in the stock market are limited. Okay, this is the point I started with. There is no new inflow of stocks, right? The market shares, whatever issued, are there. The people who accumulated at this place, what they are doing is they are only changing hands. Maybe it is changing hands, it is going up. When it reaches to a certain point where the price exceeds the value, okay, where the price exceeds the value and it is heated up so much that these people who took all the accumulated the shares here feel it's time for booking the profit. Okay, they are heated up. Like price and value, if I say, if tomato today is available for 10 rupees a kg, if it becomes 200 rupees a kg, it is overpriced, right? For the value, it is overpriced. Same way, it comes here, it's time for them to hand over. Okay, it is the time for them to hand over the shares and book the profit. Same way, if there are only 1 lakh diamonds and today the price of each diamond is 10 lakh rupees. Now my question to all businessmen or all people who are here, if I have 50,000 diamonds here, and when it reached to 10 lakh rupees here, and if I go in the diamond market and say I want to sell 50,000 diamonds, will the price remain same at 10 lakh rupees or it will come down? It will fall, right? So what I have to do now? I have to follow the same process but other way around. Okay, inverted. I will go to the market, sell some shares, so price will go down. Again, there are, so remember the statement by W.D. Gann, common investors who lose money big time buy on hope, sell on fears. Okay, common investors usually who lose money in stock market buy on hope, sell on fears. So people who have bought here or maybe here also or maybe here also, who are hopeful and are having a long-term story, they might start taking the stock when it is coming down. They will buy here, so they will take here, it will go up. Again, when it reaches here, the person here, let's call him Mr. A. Again, Mr. A starts selling, offloading. Slowly, he will offload some of his diamonds. So again, it will go. Again, here also, it starts moving downwards. Again, it will go. Hopeful people will take it up. And gradually, he has sold all his inventory here to here. Gradually, he'll offload all the inventory here. And finally, when the news breaks out that, okay, this is overvalued, the stock will fall down. And when it goes down, it goes fast and it gets stuck with the people for long time till they get frustrated. And they are holding for long time. And once upon a time, when again the tides change, again the person A or set of A people will come, start accumulating here, and again the same story. So if you go back to your charts, whenever you go back to your charts, you'll find the same story. It will have accumulation phase. It will be a markup. This is called uptrend, or it is called a markup. There will be a distribution and a markdown or a downtrend. Again, it will be given to common investors. Common investors will get frustrated once point of time. It will come down slowly after 4, 5, 6 months, 8 months. Again, the shares are changing hands from the people who cannot hold it for long to the people who see an opportunity. Again, accumulation happens. Again, the distribution happens. So everyone understands this cycle, the basic cycle? Yes? Can I have yes from all of you if you have understood this? This is the accumulation and distribution. It may so happen that not every time accumulation will be followed by distribution. So what happens is there will be accumulation, it will go up, then again it will move sideways. There may be again accumulation phase where it's waiting for something, then again it goes up, then again accumulation. So it may happen there are multiple stages of accumulation where people are booking profit and still accumulation is going on. So it may happen in steps also. Okay, it will happen on the steps also. Accumulation markup, or distribution going down, distribution going down, right? Okay, so that is how it is happening. So it is not necessary that it will happen. Now how many of you are thinking that how to identify this, right? Okay, the story is okay, but how many of you are thinking, "Theek hai yaar, the story is good, but how do we identify such phases?" How many of you are having this question? Type yes. Yes. Okay, now tell me one thing. Okay, I'll delete this graphite. I'll ask you to observe something. Okay, I'll not tell you what it is, but see, I explained you how it will look already. Okay. Yes, absolutely. Rahul said, does it reflects in volumes? Yes, I got a very good example. Okay. Here, if I go back in 2018 sometime, where is my, I had marked that phase of 2018. Okay, never mind. See, this is one beautiful example. Okay. Okay, now see, everyone look at it. Okay, what is happening is the price went down here, it came to this location, right? I'll just delete all these lines. Okay. See, I told you, when will I go to the market if I am accumulating? When is the best time for me to go and buy in the market? When the stock price is coming down, right? So the price came down here. Can you see this volumes? As the price is coming down, the volumes are increasing. Again, it went up, volumes have decreased. As it came down, again, the volume increased here. See, it was increased, it went up. Okay, it came down, it went up, volume was decreasing, came down, volume shot up. How many of you can observe here every time? I don't know whether you can see it clearly or not. Okay, I'll try. Okay. How many of you can see that whenever it is coming down, the volumes are increasing? Whenever it is coming down, the volumes are increasing. Whenever it is coming down, volumes are increasing. Yes, no? If you are able to observe, let me know. So what is happening here, right? What is happening here is whenever the person, if I'm accumulating, what I will do, I will wait for it to come. And as soon as it comes to the support level, what is a support level? Support level is nothing. It's about buying. Okay, Nikhil is saying, what if the volumes are from the seller? See, there is nothing called volume from the seller or volume from the buyers only. Okay. Okay. See, it's like asking, see, this volume reflects what has been exchanged the hands. If you go and buy 1 kg tomato in the market, vegetable market, okay? Vegetable market, if you buy 1 kg of tomato, the vegetable vendor gives you 1 kg of tomato and you pay for 1 kg of tomato. So do you count it two that he has given 1 kg and I have purchased 1 kg, or it's an exchange of 1 kg only? He sold, I bought. Is it an exchange of 1 kg or 2 kg? Everyone, if I am buying 1 kg tomato from a seller, he gives me 1 kg, I pay for 1 kg, I receive 1 kg, he gets money for 1 kg. Is 1 kg sold or 2 kg sold? Was it a seller's market or a buyer's market, or both? He sold, that's why I bought, right? If he was adamant that I will not sell, how will I buy? And if he's not selling and I'm not able to buy, how it will reflect on the chart, right? So it is both. The volume is both buyers as well as sellers. It's only where they agree to sell or buy. If the tomato vendor says, no, no, I'll sell for 200 rupees a kg, I say I want 20 rupees a kg, the trade will not happen. Only when we agree to a certain price, the trade happens. So don't take it as a buyer's volume. It's the willingness you have to look at. The willingness of a buyer to buy at a lower and lower price or higher at a higher price. It's always the same. Seller volume and buyer volume has to be same. Okay. So you can see it increases when it comes here. And when you come to a certain point, let's say here, somewhere here. Okay. So again, this was, let's say if you're coming here, now, again, it's, we don't know. So this is a sideways movement right now for SBI. Okay, so let's see if it is going up. Volumes are decreasing. It's not evident here. Okay, I'll take you to HEG. Okay, what to do? Okay, what to do if you are not able to find whether the volumes are increasing when the price is going up and down? See here in this case, in this SBI chart only, the recent chart, it's very difficult to find out whether the prices are, the volume is going up when the price is at peak, or the volume are going up when the prices are at bottom, because here it is at peak, but when it is coming, here it is increasing. How many of you can observe this? Yes. Now, second thing of accumulation or distribution, where we are confused. Now, this is the state where we don't know what will happen, right? I don't know whether it is an accumulation happening or distribution happening. Not very much clear evident from this, but this is moving sideways, correct? If I don't know what is going to happen, all I can do is create a box around this entire sideways movement. Yes, how many of you agree I can create this box? Yes. I am in no hurry. So one is that there are some common features of breakouts. Okay, what is the common feature of breakout? I'll show you. Now here and here, okay, this and this. So this is a accumulation phase. Okay, this is a accumulation phase which you can see. Now we have two problems. Okay, we have two problems right now. One is when to identify when it is about to break out, right? We as a technical people, we have to identify when it is about to break out. And second is whether it is accumulation or distribution. One is I can identify as it comes down the volume. If they start increasing, that means it is an accumulation given case. Second thing is there is a similarity. If the volumes are not clear, I want every one of you to pay attention here. Okay, this is very critical. Okay, It is evident here, and then I'll show it here. See, now here, if you see the variation, okay, the variation from here to here is this much, okay. If you see the movement from here to here is this much in first, let's say 15-16 days. As the time is passing by, is the variation reducing? Is the variation, or whatever you can say, is the fluctuation reducing? How many of you can see that there was a fluctuation like this from here to here, but as the time is progressing, the fluctuation is the high and low, it's reducing, right? Same way, if you see here, there was a variation from here to here. As the time is progressing, the volatility is reducing, right? The volatility is reducing. So this is another indication that it is about to break out. When it gets compressed, as it goes forward, as it gets compressed, it is about to break out, right? So this is another indication. Again, you can see, okay, someone can say this triangle is forming, but again, triangle is part of accumulation and distribution phase. As an investor, I don't know whether it will go up or go down. So what I should do is, I should not jump the guns. As simple as that. If I identify this phase, if I don't know whether this is a triangle or rectangle or whatever accumulation, what should you do? Any guess? Any guess? Any guess? Any guess what you should do? Just wait for the breakout. Absolutely right. Just wait for the breakout. Let it break out from here with high volume. Then buy. If it is falling down from here, sell. Simple. Wait for breakout, right? Fine. So this is how we trade. Similarly, you will find lots of examples like this. Now let's go through a few examples, okay? I'll just HEG, okay? HEG, okay. Now let's examine HEG. See what is happening here. HEG, what is happening? It down went. So now can you see that the fluctuations or the width of movement is gradually reducing? It went down. The width of movement is gradually reducing. So from almost 1 month, it is in a sideways movement, correct? Okay, that is one thing. Second thing, if you see what is happening here is, if you see this volume, I'll move it here. This volume, it is at the top. When it is going up, this volume is high. Looks like it's a distribution. Okay, looks like it's a distribution. When it is going at top, the volume is increasing. Here, it's going on the top, the volume is increasing. There is a possibility now that it's a distribution phase and it may break down. But as a trader, we have identified that it is in a channel. It is in a consolidation phase. It can be accumulation. It can be distribution. We should not jump the gun. Wait for it to break out from here, or wait to go here and let it go. Okay, we have to wait for it to break out here. Earlier, there was a call and some people are already in the trade here. Okay, so they have to wait. If it goes below this, simply hit the stop loss and exit. Those who are seeing this for first time, you have to wait for it to break out here, then enter. Break out here, don't enter. Right? How many of you are okay with that? Same, let's take one more example. This one, I think this is the example of accumulation. See, again, if you see here, okay, if you see here, what is happening is, if you see the volume here, when it came to bottom, the volume went high. Came to a bottom here, it went up, volumes reduced. When it comes down, volumes increase. Here it was more, and then it breaks out with the high volume. Comes here, again, whenever it is touching here, the volume goes up. again comes here, see the volume is high and it breaks out, right? So if it is moving sideways and whenever it is coming and touching the bottom and volume are more, then it is going to break out. Now here, if you see, there was a high likelihood that it would have broken out here itself, but somehow it took one plunge and went out. Otherwise, this was a good setup for going out, right? How to set target? You can say the width and you can go. Otherwise, in this, it's still going strong. Unless until next consolidation forms, you can ride the wave. That is okay. HEG graphite, again, it's under consolidation here. You have to wait, form the triangle, take out the trade. So now, why I said, everyone remembers, right? I sent a message on that, that this is a mother of all the technical analysis, correct? Why? Because a triangle, okay, a head and shoulder, triple bottom, all this come under consolidation. If you see this stock, if you go back in time, this is pattern, which is again a distribution pattern, which is happening. It's not clearly visible on a daily chart, but if you see on a weekly chart, this is a head and shoulder pattern, which we will cover. Head and shoulder pattern, okay? Head and shoulder pattern, which you will understand later. I'll take some examples also. Head minus this location, if it falls, it will go down till this is the head till the neck. I'll explain it someday later. Whenever it breaks, it will go down as far as this width is there, and this is what it went. Almost it touched at this level. So again, this is a distribution pattern. So all patterns, head and shoulder patterns, triangle pattern, triple bottom pattern, all these are part of accumulation or distribution. So once you understand what is accumulation and distribution and what happens after that, if you know the base theory, then it is easier to understand the triangles and the head and shoulder and triple bottom or triple top, like that. Everyone okay? Can I have, is it okay? Is the topic of today is clear, and how to, what is accumulation, distribution, and what is happening during accumulation and distribution? The handing over of stocks from one party to another party, logical party to a hopeful party. Okay. Okay. So if you have questions, then type in your name. I'll come to you one by one. Okay, Arna. Okay, I'll allow you to unmute. Please, everyone, don't unmute. Don't jump on the question. Okay, Arna, I'm stopping.